Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so last week's video, I went over a number of things that stood out as bullish, and it seems like those things were pretty spot on. However, over the course of the week, we did hit a new all-time low at $3.58.5, but I do feel like that was a buying opportunity of a lifetime because we did close the week green, being up over 7% on the day Friday, February 9th, closing at a price of $4.38. And it does look like we put in a bullish engulfing candle for the week with a nice bottoming tail coming down, so showing a lot of strength. I'm going to go over some levels in this video that I think will, make you feel pretty good about this. And I do think it has begun. I think it has started. I do think that the bottom is in and that we will be seeing much higher prices later in the month and likely continuing into the year. So pretty exciting, excited to go over the levels with you that I've gone over in previous videos, which I typically go over on the daily time frame. And here we can see that last week's video, I did point out what looked like this falling wedge, thought that looked pretty bullish. We did break to the downside on Monday, February 5th, hitting a new low on the day of $3.60, closing slightly above that at $3.67. And then the following day, putting in a new all-time low at $3.58.5. But putting in a bullish engulfing candle there, closing on the day at $4.07, right at this yellow line that I had marked previously, having been the open on January 17th, as well as the close here on January 26th. So that does seem like it's a pretty significant level. But then following that day, we did get a pullback. Really, this was just bullish consolidation, a bull flag forming, that we did get a break to the upside. And interestingly, the high of the day does look like it intersects with this downtrending line. I had gone over that weeks ago, suggesting that the price was trading within this downtrending parallel channel. This is based on these three touch points that you can see highlighted by these blue circles, one being the low on September 8th of 2023, and then here the close on December 4th, and then also the low on January 2nd. And so I believe I had put that parallel channel up for the first video of this year. I do them weekly on Fridays. And just after that, we did break below the channel. So that was pretty disappointing to see. We did get a retest of the bottom of that channel, got rejected on January 22nd, forming this bullish falling wedge, which we did fake out, break down to the downside before forming this bullish engulfing candle. And now, again, today, Friday, February 9th, testing the bottom of that channel, getting rejected at it with a high of $4.49 on the day. I suspect that next week we will be retesting that channel, but breaking into it and possibly testing $4.81, if not higher. I do think there's a lot of bullish stuff going on, and I do think that the lows are in. And so I just wanted to go over some Fibonacci retracements that I do think could suggest some guidance levels that we might be hitting either as support if we do pull back or resistance as we move higher, which I do think will be happening next week and in the weeks ahead before earnings, which will be reported on February 28th. But yeah, getting back to the chart, looking at some levels that do stand out to me, as I had mentioned, $4.81, that being the high on January 22nd. It's going to be key for us to break above that and close above that, ideally getting two closes above it, confirming the breakout before we can move higher. But if, we do see a little bit of a pullback, as we did see that following the high of the day at $4.49, I do think we might be consolidating a little bit, like forming another bull flag like we saw here before before making another attempt to break back into the channel. And so I've done some Fibonacci retracements here. I've just grayed them out, so just bringing them back into picture. We can see this one going from the low of January 17th up to the high here on January 22nd. We can see that the 100% retracement, so returning to that low, is at $4.01, so a key level to be keeping in mind. That was also last week's weekly close, and I should note that since this is a Fibonacci retracement going from a low to a high, that is looking for retracements to the downside that could serve as support. And so $4.01, of course, that is a key level. And then if we do an extension from that, the 1618 level is at a price of $3.51.2. We nearly saw that as a low on the day of February 6th. I don't think that we're going to be hitting that level. I think that's in the past, but I do think that this was a good guide for where we might be finding a bottom. I think that bottom is in. But anyways, another retracement that we could look at is going from the low here to the high of the day. And since this is a low to a high retracement, this is again considering levels that might serve as support if we do retrace. And so just looking up here, we can see that the 236 level is at a price of $4.28. We did close above that. So it is quite possible, though, that next week we might see a pullback to $4.28, if not lower. Those could be dip buying opportunities before we break higher. Then also we do have the 382, which is right around a price of $4.14. That does look like we had the open price today at $4.15, did get a wick below, but that does look like it has served as a significant level, a level that will be acting as support moving forward into the future. Also do want to point out the two prior wicks from yesterday, February 8th, as well as Tuesday, February 6th. We did have wicks going up to that level, hitting highs of $4.16. So again, $4.14 to 16 cents could be key support. We also have the 50% retracement at a price of $4.04, right around that psychological level of $4, and as well being the low here of $4.01 and that yellow line at $4.07. So I do think that those are some levels that could be serving as support, as well as potentially the extension of the base of this falling wedge that I have drawn here, which could be returning to price of right around $3.95. So do keep that in mind. But then if we do look for levels going higher, what we could see based on a retracement here that I have again grayed out, these red levels are going from the high here down to the low here. And also I do have this red line here marked at $3.67. That was the lowest close that we've seen, so we do not want to be seeing closes lower than that. But looking at these retracements, what can we see? We do have the 618 retracement at a price of $4.34. We did close above that for the week. That could be support, but it is quite possible if we dip below there, that could act as resistance, also coinciding potentially with the bottom of the channel. So keep that in mind. The next level up is the 786 at a price of $4.55. That would coincide with breaking into the channel. And so that could be a key level, perhaps as a pullback that we do retrace to the bottom of that channel before continuing higher. Then again, this level at $4.81. That was the high on the day. We do see that coinciding with the orange line that I've drawn there. And then moving up higher, I do think we have a lot of bullish moves in the weeks ahead. The 1618 retracement would bring price to $5.56.7. So right in the middle of that channel as well. There could be some resistance around there, but I don't see too much in the volume profile. Moving to the next level up, we do see a price of $6.79.2. That is the 2618 retracement. We do see a volume shelf kind of lighten up there, but if we do take a step back, we do see a lot of consolidation around that level, really beginning at a price of $6.60. So we could see some resistance there that also potentially coinciding with a breakout of this downtrending channel. We might bump our heads there before we retrace, test the top of that channel as support before continuing higher, like to the next level, the 3618, which is at a price of $8.01.7, also being right around the psychological level of $8 and potentially bumping our heads with this purple line, this downtrending level of resistance that we could be seeing in the next couple weeks, perhaps by the end of February. We could be seeing levels like $8, but that could act as resistance as we do see this volume shelf here, coinciding with all this consolidation over here. And then also, as I had noted, this consolidation here corresponding with this volume shelf. So I do think that we will be seeing much higher prices in the weeks ahead. I do think we could be seeing a price of right around $7 or $8 around earnings. Possible there will be a pullback around there, but it is also possible we will be seeing price moving higher, like to $10 a share, corresponding with this gap fill. So I do think that is pretty exciting. As you can tell, I am excited about the stock moving forward. And before I close the video, I do want to point out that RSI is at 45.55, so still in the lower half, ranging between 70 and 30. We are not yet overbought. As you might think, there's a lot more room to go to the upside, and so I am excited about that, and I'm looking forward to seeing where price goes in the weeks ahead. Hopefully these levels were helpful for you, and if you found this content helpful, make sure you like the video, share your thoughts in the comments below, and subscribe to the channel for more videos like this. Thanks a lot for watching.